I guess moving on to our next speaker. This next speaker I want you guys to just get ready and help give him the warmest and the brightest of welcome, right? He is popularly called the Africa FinTech guy. We are having a FinTech event and we have the honor of having the Africa FinTech guy. It's such an honor and I am particularly glad to have him. We will be having Wiza Jalakasi up next. Wiza is the director, Africa expansion at Ibanex, and I've known Wiza for a bit, maybe 3 years. I mean, silent follower, but I see the great stuff he does. I see his moves and strides in the industry. He's a go-to guy for the industry, and I'm sure he has so much to tell us today. I hope you are ready. Better get your writing pads and notes. This is the time to jot. Don't just let the wisdom be flying around. So Wiza is going to be talking to us about innovation, and he's also going to be talking to us about collaboration in the industry. He's an operator. He knows like what happens behind the scenes. So get ready. This is going to be insightful and exciting, and I particularly cannot wait for this session. So with the honor I have, join me as I welcome Wiza Jalakasi. Thank you, Wiza. Are you set for us now?
Yes, I am. Thank you so much, Elizabeth, and thank you, Betty, for you guys putting this together. Cool. So I'm Wiza. I lead Africa expansion at eBanks. You may have not have heard of us, but we're pretty big in Nigeria. We quietly process payments for some of the brands that you use, like Temu, Meta Ads, Spotify, Netflix, and other big brands. We're headquartered out of Brazil, founded in 2012, and since then we've grown to cover 29 markets in the global south, Africa, Latam, and Asia. And yeah, we help some of the world's largest e-commerce brands collect from local payment methods, and in Nigeria that's like bank transfer, VertCard, and etc. So when Daluchi was presenting, I then realized that, I don't have slides. But because we live in 2025, I quickly went on to Manners, an AI tool, and I pasted the email that Elizabeth sent. And I said, make slides for this workshop. And he made the slides very quickly. So I would like to borrow the screen share, even though I like looking at myself there. Betty, if I can.
Take over. You're free to do that.
Okay. So let's review the slides together and we can comment on AI. So great. You did a good job. I have the questions and I prepared the answers for the questions, but I didn't prepare slides because I thought it was going to be like more of a chat session. And it's really weird that you guys are not switching on your video. Like I'm just talking to the abyss. So for those who are comfortable, please, I like to see some visual feedback to understand whether the message is resonating or not. But maybe it's Saturday morning, you're still in bed, so there's no wahala. I cannot fault you. Cool. So before I dive into the slides, what am I trying to cover here? Basically, just like what are the real key challenges when you're developing fintech products for emerging markets, particularly in Africa, and how can those challenges be overcome? So let me start there. I think I don't know if I should introduce the African fintech landscape to people who know it as well as you. I imagine a lot of you are deeply familiar with what's happening specifically in Nigeria, but more broadly in Africa as a whole. There is a big opportunity, plenty of growth. It feels like we're almost back to 2021, where every other week, Kate from TechCrunch will now announce that XYZ has raised some significant funding. I think Nigeria has been sort of like a bright, glowing spot in the fintech industry in Africa, just because of the forward-thinking policies of the CBN. Please, if anyone from CBN is listening, I think your policies are very forward-thinking, and we're always happy to comply and align with them. Compared to other African countries, like Nigeria stands apart because of the real-time payment rails, the virtual accounting infrastructure, and then also the BVN system, which makes it very easy to onboard people onto financial services. So for me, the biggest challenge is one thing, and many people don't really like saying it, but I think it's true. People don't have that much money. Like people are kind of poor, right? So when you're building your financial service, you need to recognize that the target customers may not have as much purchasing power as some of their counterparts in other markets. Jake Kendall, who's an investor with DFS Lab, he put out an article a few years ago where he famously said that, like, if we take all of Nigeria, all of you, champion of Africa, 200 plus million people allegedly, the whole GDP is not bigger than like Boston, Massachusetts. So I think it helps to put things in perspective around what the size of the market is and what people are willing to pay, and then you design with that in mind, right? Keeping in mind that, okay, if you're competing with food as an expense, don't build very expensive billing structures into your product. And you kind of see this play out with what some of the most successful fintech products are in Nigeria. They're typically free or close to free, and then they allow you probably to make money, right? So a big example, I think, will be OPay, who had like overall free transfers for some time. Now I don't know whether they have a specific number of free transfers per day, but it's very cheap to use OPay. And that OL thing, like that thing is insane. 3 free transfers a day. But that OL thing is insane. Like you have essentially a current account that you are earning interest in on a daily basis, but you can transact from it. Like when I explain this concept to fintechs out of the US or Europe, they're like, wow, like how is that even possible? It's like, it's only possible in Nigeria because of the forward-thinking innovation of the CBN, Central Bank of Nigeria, best regulator in Africa. So that's the first challenge. People don't have as much money, and the solution is build in very palatable cost structures, or if you're able to have a functionality that enables users to earn money or to cover their costs, that can really help to drive your growth in these markets. And that's not only exclusive to Nigeria. I think the same is true for South Africa, where people are very sensitive to costs. So having a cost framework that is pretty attuned to that, I think, will lead to your success. And there's a very interesting case study of a bank here in South Africa, Capitec Bank, which for a very long time, South Africa has had banks that are over 100 years old. So very mature banking industry, but not like the same infrastructure. So for example, if I want to do like a real-time transfer from one bank account to another in South Africa, that's going to cost me 50 Rand, which is 4,200 Naira, right? Like that could never fly in Nigeria. People get pissed the moment you want to start charging 10 Naira, but like that's the reality here. And financial services are very expensive. And Capitec Bank, which didn't exist up until 2000, came into the marketplace and started to target the consumers who are perceived as not really undesirable, but maybe not as profitable or as lucrative as the other ones. So they managed to grow from non-existence to now being the #1 bank in all of South Africa, a retail bank. So they have over 22 million customers that they've accumulated in 25 years. And they are now also the most valuable bank in South Africa by market cap. So now all the other banks, Standard Bank, which operates as Stanbic in Nigeria, FNB, which also is in Nigeria, they're all now scrambling, trying to figure out, like, okay, how do we deal with this Capitec monster that has come out of nowhere? And it's now the most popular bank in the country because they understood that people are very price sensitive, and they built around that. So I think that's like one really key thing to keep in mind, that as you're building this thing, remember the plight of your customer. Your customer is not the type of person who's going to show up to watch FinTech innovation webinar on Saturday. They are in the market, they're hustling. So it's something that's very important to keep in mind. I think that would probably be the biggest challenge. Second one, I think, would be around regulation. I'm not going to touch on that because it's been covered very, very comprehensively, and I agree with a lot of the points that were shared earlier. I think that you need to keep in mind the regulatory framework of the market in which you're operating, and then you try to anticipate the needs, because when you get big enough to matter as a fintech business, in the beginning it's fine. You can do whatever you want if you have like 100 users. But once you get big enough to start to matter, the regulator is going to notice you anyway. So you'd rather have had some existing contact or some sort of communication with them before, so that even if what you're trying to do is maybe not very clearly regulated, you can have evidence to say you tried to engage, right? So if you don't get an explicit no, or if you get ignored, at least you have the proof to say, but we reached out about this thing and you guys didn't give us feedback, so we assumed. That's a much better position to be in then. We have not seen you, and the first thing we're hearing about this is because customers are complaining that you haven't refunded them their 10,000 naira. So keep always the regulator in mind and design with regulation in mind, even when the regulatory environment is not clear. That's actually a very opportune time for you to be able to influence it in a meaningful way, and maybe the regulation can be drafted based off of your recommendations and suggestions and best practices. So aside from this, I've covered regulation, I've covered scarcity. Wow, this AI is not bad. Just so you know, I'm using manas.ai. It's free for one task a day. Very, very solid stuff. I'll touch on the other 2 points, scale and profitability, right? I think the really big thing is it's very hard to reach scale if you're only in one market, right? You probably need to be in more than one market unless you're going deep into that market. So Nigeria is one of the markets where if you go deep, you can make enough money as being, 5 or 6 other markets. South Africa is a market in which if you go deep, you make more money than being in the next other 10 markets next to it. So if you take South Africa alone and you combine the GDP of the other countries in the Southern African Development Community, so the countries like Angola, Zimbabwe, Zambia, Mozambique, Malawi, you put all those countries together, it's still not like half of the GDP of South Africa. So if you go deep in a market, you can be able to achieve that scale and profitability. So there's 2 ways. You either go wide or you go deep. And it's important to have what your ultimate goal is at the beginning of your endeavor, because it's going to affect how you plan and what you plan for. Both approaches are going to take you a significant amount of time, but if you're going to go deep in a market, then you want to invest in making sure you have the best product, the best pricing in that specific vertical, and the right regulatory cover. If you're going to go wide, maybe you don't have the best product, but you have, something that kind of like is a minimum viable product, but works across multiple geographies. And that's something that you must also keep in mind. Then robust corporate governance. This one is very interesting because in some of the fintech businesses I've been involved in, you design all this security infrastructure, you have all these cloud security guys come in and do all this thing, and the thing is bulletproof. And then one engineer like that you hired 6 months ago now decides that he wants to buy a new BMW, and then he now sweeps money from the internal accounts. And it's like, okay, so how do you deal with that, right? We're in a low trust environment in many of our markets, and the biggest risk is actually internal. So how do you build governance structures internally to make sure that one clever developer like that doesn't just wake up one morning and decides to shift away with millions of dollars of your customers' money? If you look at the historical pattern of breaches that have lost money, even when it comes to large banks and telcos, your MTNs, your large banks, there's usually one insider like that who is not very happy, maybe it's not well compensated, or is trying to pay for something expensive. So having those governance structures and mechanisms in place, I think, is something very important to think about, because the danger is not from the outside. Most of the time it actually comes from within. So see the AI plugging itself. This has killed me. Last point, okay, leveraging generative AI. AI is plugging itself. It's like, yeah, I use AI and everything. I don't know if I really agree with these slides that the AI has prepared. I think these make sense in markets like new partnerships, in markets that are a bit more mature. I think the right partnerships are definitely more important than new partnerships. So making sure you have partners who are trustworthy, reliable, and proven in the market before you now go and launch your fintech app, and all your accounts are with Vantutu Microfinance Bank, which no one has ever heard of. You want to probably pick people who are trusted in the space, and those people are. Sustainable growth, I think, is quite important, and I've seen this, happen over the Nigerian fintech industry over the last 2 years. In the past, everyone was dishing out dollar card, hey, free dollar card, free dollar card, free dollar card. Now everyone is telling you, oh, dollar card is $5 per month at our rate. I think it's a very healthy shift because you don't grow as quickly, but then you have customers that you can actually retain. And I've seen quite a number of fintech businesses become profitable on a unit economic basis by focusing on ensuring that you're not scaling negative unit economics, so each additional customer isn't costing you money. Then governance I've spoken about already, and the AI has plugged itself on generative AI. But like, if you're not using AI already right now in whatever workflows that you have, best of luck. Best of luck to you, my sister. Best of luck to you, my brother. It's not a choice anymore. It's not a choice anymore. The amount of productivity gains that you can glean from using AI in the right way duplicates your productivity. So instead of 1 people, you're like 3 people, you're like 4 people. And if you don't use it, then that's who you're competing against, and best of luck to you. Please get on the AI wave if you haven't already. A lot of the tools are free, including this one. I'll put a link to my invitation in the chat so that you guys can get some extra credits, and so will I. Remember, this slide was drafted in like 10 minutes based off of Elizabeth's email, and presented 9 slides. I just exported as PDF. I'm reviewing it for the first time here. So on the collaboration piece, I think collaboration is interesting to think about. I think it touches on many different points, not only within the organization, but also externally. So smooth collaboration. How do you ensure smooth collaboration between all the various teams to deliver innovative solutions effectively? I've tried very many different things that I've had limited success, but the one thing that I've tried that always seems to work, no matter the business, no matter the jurisdiction, is that have everyone doing customer support. Like, just have everyone doing customer support. So whoever your customer is, this week make a product. Like, a product is answering all of the customer queries. Then the other week it's operations. Then the other week it's engineering. I have not seen anything quite as effective in getting people to really understand what the pain points of the customer are and why you're doing specific things. Because you come in as a leader and you say, oh guys, we need to have this feature out by next week, and nobody really understands why. And somebody has an idea that their brother told them in a dream from last night that actually, no, this button should be blue instead of orange. But like, make the people talk to customers, and then you'll see that they'll feel that first-hand pain. And especially in consumer services, consumer is very tough. That's why I don't do consumer anymore. You will now delay someone's 5,000 naira payment. Next thing, they're shouting in your email saying that your grandmother is a goat. And like, you need to experience that firsthand so that you can really understand what the pain points are. Of course, compliance. I'll not stop shouting it. It's a very, very important part of the picture. People often see compliance as the place where dreams go to die, but when you work with them effectively, they can be the enablers of scale. Engineering as co-architects, I think that one is a given. The engineering teams need to be involved in actually designing the product. So, the way that we're structured at eBanks, we actually have product people sitting within engineering so that they can actually explain very clearly why certain decisions are being made, and also understand the constraints on the engineering side about, what can be built and what cannot. And then on the operations and risk feedback loop, the best way of doing this is just get everyone talking to customers. But you can even make it a fun system whereby when somebody emails support at something, it goes to a random person on your team, and that person has got like a 24-hour SLA to respond, and then you track it. And there's different ways to be able to do that. But if you want to get collaboration right, have people talking to customers. That's my only tip over here. So this reads like a stuff I've covered already, very Boston Consulting Group. Defining successful innovation, right? So this is like one of the latter questions. What does it look like in practice for an operator managing products and services? For me, my KPI was gross profit. So you walk into a business and they start measuring you immediately on gross profit. One thing that I think is true is that only what is measured is what will grow. So you choose the metrics that you really want to grow, and you measure those, and you make those people's KPIs, and that's what you're going to see growing. I think the traditional metrics are there, acquisition, activation, retention. Those are all obvious ones that you should be measuring, but maybe they're not the ideal KPIs depending on like the stage of your business. So, and when I was at Chipper, for example, I was at Chipper Cash before eBanks. I think many of you may be familiar with Chipper Cash, cross-border payments, wallet, blah, 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 blah. One of the key metrics that we had that was actually very useful was time to first transaction. So the time in between a user signing up and making their first transaction with their own money was a very interesting one, because that led us to know like how trustworthy are we being perceived, because there's so many different like wallets and apps that you can use in Nigeria. So by the time that you deliberately fund one specific wallet from your Zenith Bank or another wallet, it means that you have trusted that, okay, there's a specific transaction that I want to go through, and this is how we're going to make it happen. So it's a non-standard metric, but like it was the right metric for that stage of our business at the time, and using that we were able to optimize quality customer acquisition. So by optimizing time to first transaction, you attract a certain type of customer that's going to transact quickly and most likely trust you for subsequent transactions going forward. And that metric, when you combine it with acquisition, can now give you a new metric like quality acquisition. So customers who transact within the first 24 hours of creating accounts, those customers are easily more retained than customers who take more than 24 hours to make their first transaction. So you can combine those with traditional metrics to be able to create these unique KPIs that are very specific to your business and much more useful than what you are typically told is the right sort of metrics to be measuring. And then on holistic view, customer feedback, very, very important. Again, just make everyone do customer service. And I think I really agree with this point, like just don't have too many KPIs. My team only has one KPI, which is gross profit. Like how much money are you making? And that's been very effective for us, because guess what? We only focus on gross profits. That's what we measure every day. Like every day I start the day and say, okay, how much money did I make? Okay, am I guys happy? Okay, why are we losing money here? And that's obviously a function of where eBanks is as a business. We've been in the business since 2012. We've been profitable since day one. So it's about how do you become more profitable. So that's I can continue to eat chop soft life. So innovation in practice. This AI is plugging itself everywhere. Every last slide is AI. I think I will not touch too much on this. Part of the points are redundant, and I've spoken to them before. Compliance is the key to resilience, and then also good governance in your engineering part. I think people, when you're hiring engineers, you tend to look at like who has the best technical skills versus like who is most trustworthy. So if you're going to be hiring technical talent for resilience, focus on also like the soft checks, the reviews from previous employers. It's very easy to just see somebody's GitHub and say, yeah, this is the guy, this is the girl, but then not knowing that they had disappeared some money in their previous role. Adaptation, I think, is very, very key, and Nigerian market will force you to do this because every other day someone releases a new product and you have to ensure that your product is up to scratch to be able to compete with that. So I think that happens naturally. And then AI I've spoken to already, so I won't dive too much deeper on that. I think looking at the questions that were shared, Elizabeth, I'm not sure if there's much else that I haven't covered. I don't want to talk too much and bore all of you people on a Saturday, but I will be happy to take any questions and sort of spend the remainder of the time perhaps having a conversation. One rule: if you're going to ask a question, you have to ask it with your voice and your face and your voice. I'm not going to be talking to a chat thing. So let me leave it there for now.
Thank you so much, Wiza. Thank you. Yeah, so Betsy will be taking on. Yeah, Betsy.
All right. Thank you, Wiza, for that wonderful session. I'm sure we all learned a lot. I think one of the things that stood out to me was the part about having everyone talk to customers, right? Do support work, basically, because a lot of people are very far away from the idea of what is needed is very different from what the customer actually wants, right? So that's actually very important. So let's get right into it. So does anyone have any questions for Wiza while he's here? Remember, you have to turn on your video and actually speak. Anybody? Come on, don't be shy. Yes, okay, let's have it. Technology, you're up. So let's see you.
Sorry, I was speaking on mic. Can you hear me?
Yeah, we can.
I mean, thank you for not really a question. I think it's more like I really needed this mostly as a founder. Sometimes I feel like I'm doing everything, trying to delegate, trying to do customer support. Like as I'm in this call right now, and I'm trying to do customer support, and everybody's just reaching out to me. So that point really stand out. Let everybody do customer support. I've been having some of my team members kind of like engage with the customers a bit, one from the marketing, one from the project manager management, and I as well also doing customer support. I think I will just extend the responsibility to almost everybody in the team. I think again, it kind of like makes them understand more of what you're building, because some people are just in your company just to earn the salary, and at the end of the day go go away. They don't really understand in depth of what you're building. And I took example from what we're doing. So yesterday I just asked my guys in the team, okay, so explain what we're building to me as a user. Everybody was just saying it's a fintech company that does this. It's a fintech company. It's a fintech app. I said, no, that a user doesn't know what a fintech app is, right? So, I mean, thank you very much, and I really appreciate your points.
Thank you very much. Great stuff. I think people are maybe shy to on their camera, so I'll remove the camera requirement and maybe do voice. But if not, it's okay. I can go play video games now.
So nobody else wants to ask a question. Oh, Callista. Okay, let's have it. That's a nice name.
Yeah, good morning. Good morning or good afternoon. Thank you for removing the camera requirements, because some of us are in the kitchen. Okay, so I joined a bit late. I don't know if the other lady that handled compliance have addressed what I want to ask, but sorry, I just have to ask anyways. So when it comes to most of these compliance and regulations in fintech, right? If you're not moving money through your application, you render financial services, but you don't move money through the application or storing bank cards, do you still need to like keep up with the CBN rules and all that?
I wish Daluchi was here to give you an informed answer, but I'll do my best to try it. So if you are moving money, right, if you are taking custody of third-party funds at any point in your flow, then that falls under regulatory purview. Whether the license comes from you or comes from somebody else, that's like a different conversation. But the moment that you are holding money on behalf of somebody, even if it's just passing through, then you are required to be regulated in some sort of manner, or to have a partner that is appropriately regulated. So for example, if you have a maybe let's say like an escrow platform where somebody is trying to buy some product and then you hold the funds in escrow, and you're using say Paystack to do that, right? So the user pays to like Paystack, and then within the Paystack environment you automatically disperse to whoever needs to be dispersed. Then you don't need to have a license because everything is being covered by the financial infrastructure being provided by the licensed entity, which is Paystack. But now if you have wallets, if you have a balance that you're showing in your app to say, oh, you have collected and you're now displaying 5,000 Naira, CBN is going to come and ask, this 5,000 Naira, where is it sitting? And that's when you now need to show, okay, it's sitting in this financial institution that has got this particular license. So let's use an example of, this is app that Paystack launched recently and it caused a lot of brouhaha. So everything that they were doing was fine, but they don't have the license to be able to take deposits and hold a balance. So that's the problem with Zap. Zap has a balance. That's why the CBN now came and say, you guys, you're licensed to collect payments and to disburse payments, not to hold deposits or hold balance. And that's when you now see, oh, fine or XYZ. But I don't know, they were talking to the CBN ahead of time, so I'm sure there's some things that we don't know about what really happened on that day. But I think that's a good heuristic, and always err on the side of caution. So always ask the partners that you're working with for their regulatory overview that covers the solution that you're designing, and make it clear to them that, hey, me, I don't have a license. I'm using your license and cover. So I think that would be the best way to play it.
All right, thank you so much. That was helpful.
Mm-hmm.
All right, thank you. So anyone else? Okay, Kevin, let's have it.
People are signing AI. Hey, Kevin, how are you? Hey, Ahere, Mayoga. What's up, bro?
Hey, okay. Quick question for you. You mentioned going wide or deep in terms of building products for Africa. In terms of next frontiers beyond Nigeria, South Africa, Kenya, in your opinion, what do you think we need to build next in order to advance the continent?
So I actually think we haven't even finished building the basic things. Like I used to think that fintech was solved already, but one of the interesting challenges, I guess, when you now start building for global businesses, right? So before we're just building for the typical consumer, but now that's, I'm starting to build solutions for like Netflix. The things that Netflix is asking for, no African fintech has built them. So I'm now going to some of the biggest African fintechs and asking like, hey, do you have this feature? And they're like, what's that? Senior product manager, what's that thing? And I was like, okay, me also I didn't know, brother. Let me explain to you. And it's like very, very basic things, right? Like multiple partial refunds, for example. Most of the fintech providers in Nigeria didn't have it, and we had to like ask them to build it for us. And I'm not going to name names, but like think of all the biggest fintechs in Nigeria that provide finance. They don't have like the features that some of the most sophisticated businesses in the world consider to be basic. And I found that journey very interesting. The other piece is that like outside of Nigeria, there really isn't like a very nice fintech experience. So like I would love to have like OPay, but for Rand, and that doesn't exist in South Africa. It doesn't exist in Kenya. I think in Kenya, where Kevin is based, I think, I hope you're still there, there's only one digital bank in Loop, and just go and Google NCBA Loop Kenya and go and read the reviews on their App Store and their Play Store. Like a lot of basic things haven't been built, which is why you see a lot of Nigerian businesses hopping over to Nairobi, where the weather is nice and there's opportunities outside of M-Pesa. And then I think there's markets like Egypt, right? So Egypt right now, you can't use your cards outside of Egypt. So debit cards don't work. It's another Nigeria where your Naira card, your Egyptian pound card doesn't work outside of Egypt. And then Egypt also has a domestic card scheme. Let me get this for you. This one. MISA, right? So that's the equivalent of Verve. And like these cards, there's almost 40 million of them. They don't work outside of Egypt for international e-commerce. You can't use them to transact when you travel. Ethiopia is another really huge market, over 100 million people that have the same constraints as Nigeria. So if I wasn't adequately incentivized by my Brazilians right now, I'll probably be building in Ethiopia, because I think that's going to be the next hidden giant of Africa. Very big domestic payments industry, but not much happening internationally. And, I think there's a massive, massive opportunity there. So, Kev, I don't know if I've answered your question.
Yeah, yes, you've answered it well, Wiza. Thank you.
Thank you. And good to hear from you, brother.
Always a pleasure, Wiza.
All right. Miss Calista again, and then I think I'll drop. I don't want to take too much time. I think I'm already over.
Thank you so much. Sorry, I had to come back because of what you're explaining to Kelvin. Okay, so the reason I asked the question I asked is because, like, aside my 9-to-5 where we build core banking applications, I'm co-founding a startup. So it's something similar to Zero, QuickBooks. I don't know if you know those applications.
Yes, I do.
Our target market is like Africa, right? So we are trying to introduce a feature that facilitates online payments and then bank reconciliation. So we've tried to get some easy license or go ahead from Nigeria banks so that they can easily reconcile their account statement directly on the app. It's not working, right? So we now did it manually, where you can upload your bank statements and then the app automatically reconciles it for you. So now coming to online payments, facilitating online payments in your firm, what you just explained to Kelvin now, since Africa is our target market, do we need to have licenses from different countries where we want to operate to be able to use their cards and in the application to facilitate this online payments, or the regulation we have here from Nigeria can, solve this for us?
Okay, so those are two different things. If you're building accounting software, which I think is a big gap, like Zero, etc., that I think is a big opportunity on its own. If you're going to payments, that's like an entirely different business, and I don't think you should mix or combine them. I'm surprised that you weren't able to get bank account history in Nigeria. You should use something like a Mono or an Okra, which already have the necessary agreements with the banks and can pull that data for you for automatic reconciliation. So you don't have to build like something which parses a statement manually. So please look into those solutions if you haven't already. Maybe you have and there was an issue. But you can use something like a Mono or an Okra, and you can connect to people's bank accounts and build the accounting software. And I think you should just build the accounting software first. And if it works very well and you have a user base, then you can go and figure out whether you want to initiate payments from the accounting software, which the open banking infrastructure will allow you to do. And when you say Africa is your target market, well and good. I love the ambition, but you need to start somewhere. So pick a handful of countries and narrow down there. You generally don't need licenses to do open banking read operations. So if you're not like moving money around, you don't need that. But when you start moving money around, if you can't rely on your open banking provider's license, then you might have a bit of trouble. There's an app called WAFEQ, W-A-F-E-Q, out of the UAE that does that. And they've been able to beat Zero and Sage, because you can just connect your bank account and it does like automatic reconciliation for you, and actually allows you to import transactions onto your general ledger from your bank account. So your bank account is the source of truth, and you can prepare your accounts from your bank statements as a source of truth, which I think is like very appealing to a lot of SMEs. So that would be my guidance there. You generally don't need licensing, but start small. Pick a handful of countries, build the accounting software first, and then start to think about payments. If you try to do both at the same time, I think you're going to find it extremely challenging.
Thank you so much. Thank you so much for this response. You really helped me. Thank you.
Okay, no problem. I'll put my payment link in the chat in case you like.
Like, you deserve it. Thank you. It has been a thorn on my flesh, especially using Okra. Thank you so much. That makes it easy.
Okay. try Mono if Okra is giving. Woo, 2 referrals, 2 people signed up for my AI. Thank you so much. I've pinned it in the chat. Thank you, Elizabeth. Thank you, Betty. I'll head off now.
All right. Thank you so much, Wiza.